This is the Monday, October 24th, 2016 meeting of the Auburn Board of Selectmen. This meeting is being recorded. Is there anybody in the audience recording the meeting tonight? A representative from the Worcester Telegram and Gazette. Being no others, can we stand and salute the flag? I pledge allegiance to the flag of the United States of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay. Thank you. By the clock, it says 7:05 for our first. Well, this is a continued hearing, so we can get started right in order. I have no public comments tonight, so we're going to get right into presentations and public hearings. The first one for 3A from Greece Summit, and this is a continued hearing. And we...
I'll make a motion that we reopen the hearing. Second.
Okay, all those in favor?
Aye.
Aye. Okay, is there anybody from, please?
Good evening.
Good evening. Well, we had some questions for you the last time you came up about some information that, and some...
Certification.
Hopefully you were able to get the answers for us.
Yeah, you asked about the tips. I ended up, we did online testing. And I also, there was a class Saturday. I sent my employees out to that as well. So they did the online and they did the live testing. So just because the online is a little different than having someone there live explaining everything. So I had them both. I have the certification here. No, this is the one for the live premise.
Thank you for taking care of that. Now, it looks like with the number of people that you have here in front of you, there's going to be somebody on duty every time there's alcohol sales at the store.
And I put it down as part of my hiring packet now, along with other training they have to do. That's also one of the things for all new hires in the future.
Okay. Is anybody else going to... Yes, Mrs. Goodrich.
Thank you, Mr. Chairman. I'll just comment since I had asked you quite a few questions about this tip certification. First of all, I hope that you found it useful.
It was.
Eye-opening. So, you know, I'm glad that you were able to do that because I think it explains to you our concerns of really understanding the process and the importance of not selling to underage people. So I appreciate you doing that. And just to reiterate, you will have someone on at all times who's tip certified when you're selling alcohol.
And after taking the course myself, I also, like I said, the terminals for the fake IDs and everything else, I'm going to invest in that. That way, we're 100% sure. I've looked them up the last few weeks since I've been waiting, and it is helpful. That was my biggest thing, was that, the fake IDs.
Okay. And then your carding process is going to be what?
That's what I mean. We'll have a terminal.
Okay.
Mine has I have a terminal now where I can scan like a mass license for tobacco, but I want to get the terminal that scans, checks for fake IDs, and also has memory built in.
Okay.
That way, if, let's say, 6 months, 8 months down the road, liability issue from it, it's all in memory. So I have looked into it.
Okay.
And it's something I just don't want to do anything until I get approval from the board.
Great.
Before I get anything.
Has anybody got anything else? Being none, I don't think we have any butters here. Being none, then I'll entertain a motion.
I'll make a motion that we close the hearing. Second.
So the motion made to close the hearing. All those in favor? Aye. Opposed? Okay.
Mr. Chairman, I'll make a motion that we approve the license provided that all applicable requirements of the state and town and any of its departments, boards, and commissions have been fulfilled. Said license is subject to all conditions stated upon it. Failure to comply with any and all conditions shall invalidate the license and render it null and void, and to also include a copy of our full policy when the license is issued.
Motion's been made and seconded to approve the license. Is there any further discussion? Have you got anything else?
No.
Okay. Being none, all those in favor?
Aye.
Opposed? Thank you.
Thank
and
you.
good luck.
Have a good evening. Thank you.
Okay. We'll, with the tax classification, with the hearing, was the presentation take a couple of minutes to set up, or is it all set, ready to go?
Just around a minute.
Okay, if you want to, then, instead of jumping around to the, tonight, we will go right into the presentation. Yeah,
Make a motion,
it's-
so we...
It's 7:10, so, well, I guess while they're setting up, can we move up item 5D, discussion about the October 31st Board of Selectmen meeting?
So moved.
Second.
All those in favor?
Aye.
Okay. I spoke to Ms. Jacobson about the meeting for next Monday night, and she's telling me that there is nothing coming forward for us, so that we don't have a meeting on the fifth Monday of the month, which is out of 2, 4, and 5 weeks of the month. So there won't be any meeting next Monday unless somebody can think of something that's going to come up. But other than that, we won't be having a meeting. And I don't think we have to have a vote on that. It's just to talk about it and just say that we won't be having a meeting next week. Under 5C, there's no proclamations. We can do, well, we still got a minute or so here. We can do gift acceptances. Let's go through here and see if we have any or not. No, there were no gift acceptances. Okay. All right. Yeah, we have, and communications, we'll cover those as we get in, because we have a lot of communications about the tax classification tonight. We do have several in front of us, and we will go through the presentation tonight, and we do have a lot of people in support of making a concerted effort to help out with the tax classification as we can. So we'll have the presentation tonight, and we'll go forward with that. And that clock says 7:10, so I guess I'll turn it over. We'll have the tax classification hearing, and have a motion to open the hearing.
So moved.
Second.
All those in favor?
Aye.
Opposed? Okay. And we will turn it over to Ms. Jacobson, or to...
Through the chair, thank you very much.
Please.
As you know, this is the annual tax classification hearing. As we always do, we start off with a presentation from our chief assessor, Cindy Cosgrove. And following that, if you have any questions, generally we go through the presentation and have questions after the presentation. The way it's laid out, hopefully it will address some of your questions ahead of time, and then certainly any questions after that we're going to answer, as is Ed Kazanovich, Chief Financial Officer.
Great. Thank you.
Well, good evening. Our favorite time of the year again. I'm surprised. The group has gotten very small since the first year I was here, and I think there were probably about 300 people here. So this is good. My name is Cindy Cosgrove. I'm the assessor for the town. This is Mary Oliver. She's my assistant assessor. You probably see her out and about. Does anybody need a copy of the presentation to look at, or is everybody all set? Okay. So for 2017, this was a revaluation year for the town. So we've had a few more changes in our values than normal, and we've gone through the whole process. So you may see a few changes this year in the numbers. The reason we're here, basically just to kind of give you a disclaimer, the calculations for the tax rate and the other numbers are estimated as of the time of preparation. There may be some additional slides that may be in here that you don't have in your handouts. And basically what you have to keep in mind is that this is part of a process, and the numbers are not final until after we go through probably about another 2 weeks worth of work. The purpose of the hearing, Mass General Law, Chapter 40, Section 56, allows a shift in the tax burden between property classes. This does not change the total tax levy for the community. It simply determines the share that's to be borne by each class. What this hearing doesn't do is it does not determine the tax rate for the town. It only determines the distribution of it. Classification does not determine how much money can be raised. Town meeting voters determine what the tax levy will be. The tax levy is determined by town meeting appropriations and expenditures, state and county charges, and it is paid for using town revenues like excise, fees, enterprise, and other available funds, total taxable real estate and personal property, state aid and reimbursements, new growth for the town, and debt exclusions and other overrides. Just an overview of the revaluation process. Residential properties, we adjust them annually to full and fair market value. And then in every third year, and starting after this, it'll be every fifth year, we go through a full certification process with the Department of Revenue. Attributes that affect the value include style, the condition, the interior, exterior features, and the size. Commercial industrial properties, their values are based on an income approach to value per Department of Revenue requirements. And personal property accounts, that is done by net book value, new minus depreciation. There are 4 votes that we are going to have the Board of Selectmen asked to take tonight. The first is on a residential factor, which shifts the tax rate between residential and commercial properties. The second vote is on an open space discount. That shifts the burden within the residential classes to discount open space. The third is on a residential exemption, which shifts the burden within the residential classes. And then the fourth vote is for a small commercial exemption, which shifts the burden within the commercial industrial properties to give a discount to qualifying properties. This is just showing you the change in the percentage of levy for the 4 property classes from fiscal year 2008 through fiscal year 2017. Back in 2008, we were in the process of starting to change the shift. What you'll notice on this chart is from 2008 to 2017, the commercial sector of the town has actually grown. Your industrial and your personal property sectors have actually grown, and the proportion that is of the residential property has actually declined. So we are seeing a shift. We are getting an increase in our commercial industrial base, and it's starting to compensate for part of the residential. So the tax levy, the levy limit is the maximum amount that the town can levy in a given year. It consists of last year's levy plus new growth for this year and 2.5%. The maximum allowable levy is the levy limit plus the debt exclusions and overrides. And the excess levy capacity is the maximum levy limit minus the actual tax levy for the town. The calculations for, this should say fiscal year 17. For fiscal year 16, our levy was at $39,586,871. The amended fiscal year 2016 new growth, we did not have any, so that was 0. So this year, our 2.5 allowable levy increase was $989,667. And our new growth for the current year was $867,267. There were no Proposition 2.5 overrides. We do have in 2017 $2,811,548. Those are the debt exclusions that we have on the books for the high school and for the middle school. So our maximum allowable levy this year would be $44,255,153. And as you see further on, we are not levying to the full amount. For 2017, the factors that drive the tax rate increases. We have an increase in the excluded debt for the Auburn Middle School for the upcoming fiscal year. And we've had some demolitions, properties going off the tax rolls due to demolition. We've had some from snow damage, fire damage, or, other causes similar to that. Properties that have become exempt due to foreclosures by the town, purchases by exempt organizations. So those are all things that would change the property that we can value. For 2017, the growth trends, residential growth is up. Residential growth is the most stable growth. It's not as subject to being skewed by individual properties. Commercial growth is down slightly. The numbers for commercial growth can be affected annually by one significant new property or addition. So those are more difficult to predict. Industrial growth is up slightly. Once again, like the commercial growth, it can be affected annually by one significant new property or addition. This is the third year of very low industrial growth. It is up slightly from the previous year, but we've had very little industrial growth in the past few years. Personal property growth is up this year. These numbers tend to be volatile. The new growth from businesses moving into town has accounted for a significant increase this year, along with a complete data collection of our personal property. So we have seen a huge increase. If you look at the 4-year trends, you'll see that the residential growth has been kind of stable. It's gone up a little bit over the past few years. The commercial you've seen has gone down a little bit over the past 4 years. The industrial, you can see that share is very, very small. We've seen very little industrial growth. The personal property for 2014 and 2015 are very much where our normal growth is. This year, because of the personal property data recollection, we've seen an extra $200,000 over what we normally see. And last year, when you're looking at that number, that is skewed by the enormous amount of new growth we had due to New England Power having to redo all the power lines after the storms that we had had. So those growth amounts for personal property are really not sustainable. They're kind of like a one-time bonus for the town. Notable growth changes for this year. We had White Development Corporation build their brand new office and their training center right here on Central Street. The tax levy increased due to new growth. This is just a chart showing it a little bit differently. Once again, you can see that there's a very large disproportionate amount due to personal property and very, very limited amount due to industrial growth. This is just telling you what the change from fiscal year 16 to 17 is due to the revaluation of the residential properties. Our overall residential change was a positive 2.436%. But what you'll see is some of those numbers are higher than that, but it's skewed because we actually had a negative valuation change in our vacant land. So that brings those numbers down. This slide is it's equalizing the rate and the value changes for the town. If you had a property in 2016 that was worth $200,000, it would have had a tax bill of $3,618 at the current tax rate. In fiscal year 2017, with the valuation changes that have happened in the town, to equal that same bill, the tax rate would actually have to drop about 40 cents. So this is just kind of giving you an idea how the changes in property values are going to affect your tax rate. The first vote that we take tonight is on the residential discount. That is an up to 20% discount to owner-occupied residential properties. It shifts the burden from the less expensive homes onto the higher-priced homes and non-resident homes. Because the town of Auburn has very few non-resident homes, this is geared more for communities like Nantucket and places where there's a large amount of people who own property and rent it and lease it out. It works in those communities with a large amount of vacation homes, and basically what it's going to do in a town like Auburn is it would simply shift from the lower price houses to the higher price houses. We have never done it. It really isn't something that is really suitable for the town of Auburn. The vote on the small commercial exemption, we have traditionally done 10% in the town of Auburn. It has no effect on the residential and personal property rates. Industrial properties do not qualify, but they do share the burden for this. The exemption goes to the property owner. It does not go to the business that resides in it. It relies on what's called the trickle-down effect from the property owner to the tenants.
This is it.
For multi-businesses, all the properties within that building must qualify. To qualify, your value must be less than $1 million. You must have less than 10 employees.
Each year we're saving the taxpayer.
And basically, we have a list that we have to go through of qualifying businesses that's issued to us from the Department of Workforce Development. We have to qualify each property by the business located there. Businesses not on the list can be qualified by the Board of Assessors, but they have to be DBAs. Small incorporated businesses must be on the list in order to get the exemption. So each year, all properties not on the list need to file applications with the Board of Assessors.
This is what we
We're allowed to shift the tax rate by up to 10%, and we have to take that vote to do so annually if we wish to continue. Applications are basically processed after the tax classification hearing, so the processing does delay the actual setting of the tax rate a little bit. Any exemptions that we don't process prior to submitting the recap would impact our overlay account. Just to kind of show you what happens as you go through, basically the effect on the tax rate at various shifts ranges between 9 and 10 cents. And basically what I'm doing when I calculate these is assuming that if we vote to do the exemption this year, we would be having an exempted value very similar to last year. So its impact on the various properties, it's only 8 to 9 cents per thousand. If you look through here, this is basically showing you. If you had a property, for example, that was valued at $250,000, if they qualify for their exemption, their property tax bill would be $5,523.75. If they did not qualify for the exemption, and the exemption was in place, their bill would be $6,137.50. So they're getting a significant break on it. It's about $600. If there is no commercial exemption in place, their total bill would be $6,115. So in the end, it's really only about a $20 difference by giving the exemption to these businesses. This is just showing you the historic trends in Auburn for the commercial, industrial, personal property split. Back in 2008, we were 1.58%. In 2009, we went down by 4% to a 1.54. In 2010, they went down another 14 points to 1.40. In 2011, we've gone to a 1.35. 2012, they went down another 5 points to 1.30. 2013, they went to 1.25. And then in 2014, that was the last time we made a change, and that was to 1.22%. Basically, we have been at that same percentage since 2014. This is just comparing, kind of giving you an idea. In 2016, the cost of doing business in the various towns within Worcester County. You can see it goes from a low in Shrewsbury, where the property tax is $13 per thousand. Worcester is still way up there at $33.98 per thousand. And at Auburn, we're kind of the second highest at $24.40. Just for an example, though, Sturbridge is at $19.21, but I believe they're actually at a single rate. So they're the third highest. This is an example of the rate chart for fiscal year 2017. You can see at the various levels what the split would be. When I prepare the rate chart, I am assuming that the 10% small commercial exemption is going to be granted, as it has been in the past for 2017. Do you want to go through these, or just refer back to it after?
I think probably the best thing to do is to refer back to it afterwards instead of going through all the individual numbers.
Okay.
Thank you.
And this chart is showing the impact of splitting the tax rate on the average property. You can follow the average value for 2017, for example, in a residential home was $240,200. It's up again this year. The taxes, if you went to a single rate, would be $4,816. At the current rate we're at, it's $4,364. So you can see there's about a $450 difference if we went to a rate of 1 on a single-family house. In the industrial and the commercial properties, you'll see that, if we went to the rate of 1, there's about a $5,000 savings on those properties. This just kind of showing you, when you split your tax rate, there's a secondary effect on the value of industrial properties. If you have two properties, and property A, you have a higher tax rate, property B has a lower tax rate. Property A is going to have lower net operating income, and you're going to also have a lower assessment on the property. You're going to have a lower value. Property B with a lower tax rate, you're going to have higher net operating income, and the result is it's going to be valued higher than that other property. So the impact of the shift based on 2017 with the factor of 1.22, if you follow through on the residential properties, you'll see by changing the rate to 1, the residential properties would see an increase of $452. Basically, if we stay where we are, if we went to a factor of 1.20, you would see a $41 increase on those properties, and going to a 1.25 would net you a $52 decrease in the residential tax rate. That $52 decrease in the residential tax rate on the average commercial and the average industrial property would increase them by $690 on the commercial property and about $806 on the industrial property. So as you shift the tax rate, you can kind of see what the effect on all the various property types is going to be. This chart here, basically what this is going to do is it gives you a good comparison from fiscal year 16 to fiscal year 17. It takes into account the changes in values, what people can expect to see for the changes in their properties. It also takes into effect the various shifts that you could select through here. Basically what I've done is I've run them through last year's and this year with a comparison of 1.22, 1, 1.10, 1.15, 1.20, and the last one is 1.25. So I've run you through, a good selection, and you can see if we stayed where we are on the first slide, the average residential property is going to increase this year by $169. The average condo will increase by about $107. The average commercial property is going to go up by $543, and the average industrial property will go up by $1,117. And as you go through the different rates, you'll be able to see what will happen to the value changes for all those different properties. This slide just is comparing Auburn's residential tax bill compared to the state average. You can see that over the years we've kind of maintained a straight line in between them. The average in the state is $5,247. The average bill in Auburn is about $1,000 lower than that. So we're kind of holding our own. And just as a note, our commercial industrial rate, we were in 2015, we were the 72nd highest. This year we've gone up to the 67th highest. So we've actually lost ground in that category. For the residential home value trends, these are single-family residential homes. This is just kind of showing you what the trend has been over the past few years. You can see back in 2008, 2007, the values kind of peaked out on residential properties. We had a decline, and now you can see we're starting to get back up there. This is good for the town because we had a lot of people who bought their houses back in 2000 and 2008 when the market was at its highest, and they have been upside down in their mortgages for years. And now we are starting to see a recovery, and hopefully we'll see less foreclosures. This is showing you what the foreclosures have been over the years, and you can see starting in 2007, 2008, when these people bought their houses at the high end, we have had quite a few foreclosures. We did see a decline in 2014, again in 2015, so hopefully we'll start to see that trend decrease. This is an example of the form that gets voted on tonight. Basically, it covers the residential factor, the open space discount, the vote on that. It covers the vote on a residential exemption, a vote on the small commercial exemption, and then what it does is it shows you, once you split the rate, it shows you what the actual percentage of the levy is at 1 versus what you have voted to change it to. And then the last part of it, and one of the most important parts, it's showing you on the last page what our excess levy capacity is. This is the amount of money that the town has voted not to spend. Proposition 2.5 allows us to vote to spend up to 2.5% over the previous year's levy. And you can see over the past, since 2011, we have been consistently voting not to levy to the max. We have built up our excess levy capacity from $833,000 in 2011 to this year we're projected to be at over $4 million. So that's money that the taxpayers do not have to raise. The cost of levying to the max would be an additional $1.79 on the residential tax rate and $2.42 on the commercial tax rate if we use the current 1.22 classification split that we have now. So by voting to levy to the max, it would be a huge burden on the town. This is just giving you the actual numbers. The average residential bill, if we voted to levy to the max, if we spent that $4 million, would go up about $453, and the average commercial bill would go up about $3,822. And then the final page here is just basically, it brings you through what the residential factors are for the various splits that you could select tonight. And that's the presentation. The one thing that I did want to mention is that the exemptions that we show you in here that we vote on at the classification hearing, those do not include other residential exemptions. When we vote, if they vote to not do the residential exemption, which we traditionally have, we still do have various programs that we offer for senior citizens, qualifying veterans, blind, and surviving spouses. Those exemptions are untouched by this. And I know I've mentioned it to several members of the Board of Selectmen, but one of the things I would like to do is to go through those exemptions and form a committee to discuss maybe making changes to those exemption qualifications to offer a little bit more relief to some of our more low-income taxpayers.
Okay, thank you. Ms. Jacobson, anything from you? Mr. Kasanovich?
Not at the moment. I'll be happy to answer any questions that the board may have relative to the presentation.
Great. Has the board members got any questions tonight? Okay, Ms. Goodrich.
Thank you, Mr. Chairman. On the small commercial exemption, what do you know what percentage of the commercial base that reflects?
Basically, when we have voted the small commercial exemption, let me see if I have that in here.
Page 22.
Actually, it is. Of the commercial value in town, which is $366,841,000, we actually have $19,193,064 in total value that qualifies.
To follow up on that, now, is that something that's automatic, or is it something they apply for and are all small businesses aware of this?
We do as much outreach as we can. There are some businesses that come through on the Department of Workforce Development's list. Any businesses that come through on the list are automatically, we look at them, look at the property they're in, and if they qualify on the face, we give it to them without an application. If there are other businesses on the property that need to be qualified, then we would send out applications to all those businesses to qualify them. But if they are a DBA, we have a lot of people that are DBAs rather than corporations. They do need to apply with us annually. We try to track them, we try to watch them to qualify them, but, you know, if somebody feels they qualify, they should definitely contact us.
If I may, Mr. Chairman?
Yes, please.
So, you know, we've sat for a few years now discussing this, and as you know, I've been an advocate, especially for the business community, to do some work on expanding that small business exemption. And I say each year, you know, it's not the big box stores we're hearing from. It's not, you know, the statewide car dealerships we're hearing from. It's the smaller businesses, and I'd like to see the business community looking to advocate for an increased small business exemption. And if I may, Mr. Chairman, on another issue, again, having sat through many of these, it's not just about the tax rate. And I'll be right up front, I am going to support moving this somewhat tonight if that's the wish of the board. But as I've said year after year, it's not just about the tax rate, it's about the benefits that you get in our overall policies. We haven't gone to the 2.5, as she pointed out, for the last 6 years. I think the realized savings kind of got past us quickly, so if you could just, the sheet I just talked to you about, just
Sure.
explain to everyone watching, it's not a reduction in your taxes, but certainly it's a realized savings by not going through the 2.5, and the numbers are impressive, so if you could do that first.
Great. Cindy, if I could ask that you have that slide up right now. So I want to focus on slide 36 and 37. These slides are very telling. As you can see here, in FY17, our excess levy is growing to $4,061,000. It's growing because we're not taxing to the full extent of 2.5, and we haven't for the last 7 years. To put this in perspective, over the last 7 years, we're allowed to tax at 2.5% plus add new growth in our levy calculation. We've only taxed to a level of 7.05 out of possible 17.5%. That translates to lower taxes for our residents and our businesses in our community. That's an overall 10.45% of allowable 2.5 over that 7-year period. And that translates into $18.6 million of savings to the residents and taxpayers of our community. That's pretty substantial, and we're very proud of that. This excess levy is a result of a number of things that we put into motion beginning back in May annual town meeting of 2010, when we presented a plan to limit our level of growth in taxation, culminated with the financial policies that were presented to the Board of Selectmen and the Finance Committee and adopted in 2012, which puts limits on a number of key financial points. It's a 9-point plan that was presented to the board. For the current fiscal year, out of 2.5, we have passed along to the community a total savings of about $481,000 by not taxing to 2.5. That translates to a taxation level of about 1.28% out of possible 2.5, and not taxing an additional 1.22% out of 2.5. Like I said, over the 7-year period, that would be a savings of $18 million. And Cindy, if you can go to the next slide. If we did tax to 2.5% as allowed under Proposition 2.5, which a lot of communities, quite honestly, are doing, your tax rate would look very different. Instead of the current 18.17% at a factor of 122, the residential tax rate would be $20.06 if we were using the extent of our levy. The average tax bill would go up from $4,300 to $4,800. It's about a $500 to $600 increase in residential taxes alone. And that increase would have been realized over the course of the 7 years, not absorbed in 1 year, because the tax rate would have been higher in the previous years as well. On the commercial and industrial, the tax rate would be roughly $3 higher, from $24.55 to $27.93. And as you can see, the level of taxes would go up from currently at a rate of 122, $27,758 to $31,580. So we take a lot of pride in growing our excess levy and being able to pass that along to the taxpayers of the community. We hope to continue this trend in the future. That's why the financial policies are in place that will allow us to continue this path.
Thank you. Mrs. Goodrich.
Thank you, Mr. Chairman. If I can just finish up my thoughts here. The one last thing I did want to talk about, and the CFO did just address it, the actions that this board has taken, as well as previous members of the Board of Selectmen, in adopting these strong financial policies with the cooperation and votes of the Finance Committee, the long-range financial goals, we've set into place other things that are attractive to business, be it, where their potential employees are going to send their kids to school, the roads they travel, their employees travel, which we've put a significant amount of money into our roads, and having two of the strongest public safety departments in central Massachusetts in our police and fire. These are all benefits to the business community, and I just don't want these to get lost in, the words of tax classification and what we're going to set as a rate. We've worked hard to get where we are today, as you pointed out in the letter, that, it's taken some time. You're not asking for it to go to a single rate overnight, and I appreciate the acknowledgement that it's not going to happen overnight. And even by maintaining or moving slowly and continuing with the actions we've taken with not going to 2.5, the business community is still seeing a savings. Thank you, Mr. Chairman. That's all I have right now.
Thank you, Mrs. Goodrich. Has anybody else on the board got anything now? Okay, being none, is there anything from Eddie, Julie? Okay. I'll open the floor to business representatives. Please come forward. Mr. Sarkeesian, and identify yourself.
Good evening. My name is Mark Sarkeesian Jr. And I'm speaking here tonight representing Auburn businesses as well as residences, as I am currently owner of both. Over the past 9 out of 11 years, the Auburn Board of Selectmen have taken steps to reduce the business tax rate from the 2006 differential of 1.62 to the present rate of 1.22. The last 2 years have been stagnant, and we understand your vote, and we appreciated that. But this year, we do need to lower that differential. Sturbridge was one of the last remaining towns that recently voted to go back to a single tax rate. And we are fighting to keep our businesses that have gone to surrounding towns, and we're also fighting to retain businesses that are presently here. Our bond rate is excellent, thanks to all the hard work you people have done. And that kind of reflects the right mix of businesses and commercial use. That is why we need to continue to strive for a single tax rate in this town. We are the only town in the immediate area besides Worcester to have a split tax rate. We have made tremendous progress in bringing businesses back to Auburn, but we are still not there yet. We cannot go backwards. This is a win-win decision for the residents and businesses of our town. We have already lost the movie theater at the Auburn Mall and I understand that Reliant Medical will be taking up much of that space in the old Macy's building. We don't want to turn the Auburn Mall into being like the Greendale Mall in Worcester. Also, at last year's meeting, Mr. Carpenter stated, and I quote, "Next year, I would be looking for a reduction in the business rate, but not this year." So I hope you have a good memory.
I do, Mr. Sarkeesian.
Thank you. So I'm asking the Board of Selectmen not only to keep and increase the small business tax classification, but also to lower the differential from 1.22 to 1.17. I know it's not an easy decision to make, but it's the right decision, and the decision is now. Thank you for your consideration.
Thank you. Is there anybody else? Please, come forward and identify yourself.
Good evening, Matteo Gentili, 33 Silver Street. I just hit a milestone. Half my life has been spent in Auburn. I grew up in Worcester. But now I guess I'm a townie. So I echo exactly what Mark says. We've been coming here for a number of years asking to see that residential rate go to a single rate. About 8 years ago, the select board at that time was on board with, yeah, we're going to work and we're going to try to do it over 5 years. And as you can see, the last 3 years we haven't made a move at all. So because we've been patient and waiting, I'd hope we get some extra consideration just for that. And the thing that Mark talks about is competition. I sell residential real estate, and Auburn competes with all the surrounding towns, similar road structures, similar, like Millbury's really good with a fire department and police department that mirrors ours. So I think Millbury's the best example, but they've been stealing all of the nice businesses that used to be in our town. So I look at that as we know Millbury, we know Auburn. Look at that as an example as to let's try to reverse that trend. Let's try to get some nice businesses in here. And I think if we lower the tax rate substantially, the 1.17 that Mark spoke about, I think we'd be able to start attracting some nicer businesses and more business. And as a result, all of our taxes will go down. So I thank you for your consideration.
Thank you, Mr. Gentili. Yes.
Good evening, Mr. Chairman and members of the Board of Selectmen. My name is Carrie Cross, and I am currently the president of the Auburn Chamber of Commerce, but I also stand before you as a lifelong resident of the town of Auburn and a residential taxpayer myself. For over a decade, we have seen an economic resurgence that is part due to this board's actions to reduce the delta between the business and residential tax rates. Over the past few years, the board has made the decision to hold the gap and not reverse their course, which we appreciate. Your past and continued efforts signal to businesses that Auburn welcomes business, and I know from firsthand experience in helping to recruit businesses to Auburn that the tax rate plays, while maybe not the determining factor, it definitely does play a role in their deliberations. We have heard from members both old and new that the acts of this board send a clear signal that Auburn is open to businesses. We are respectfully requesting this year that the board take steps in setting tax rates that continue to work with the hard efforts that you have made in the past to closing the gap between the residential and commercial tax rate. I know as a residential taxpayer, this will increase my taxes in the short term, but the more businesses that we can attract, the larger the tax base expands, and in the long term, that will affect our residential tax rate to go down along with all those property owners. So I thank you again for your attention to this important issue and your consideration of our request to continue making progress towards the single tax rate in a manner that is fair and equitable to all taxpayers. Thank you for your time.
Thank you, Ms. Cross. Is there anybody else? Yes, please come forward and identify yourself.
Hi, I'm Steve Consilvia from Precinct 1. I've been self-employed most of my life, lived here for about 30-something years. And I think there's an old comic of the school teacher, and he's in front of a classroom of wild animals. And, there's a goldfish and a monkey and a giraffe and so on. And so he says, to make the test fair, we're all going to take the same test, which is to climb the tree. And so there's no way that an elephant's going to climb a tree. And so you sort of look at that and you laugh, but the reality is equality, which is what we're talking about here, that the businesses should pay the same rate as the residents, is sort of it doesn't really quite fit. Because the way a business pays taxes, a business only pays taxes on their profit, not on their revenue. Whereas an individual pays taxes on their revenue. So if you make $50,000, you may get a couple of line item deductions on your income tax. But basically, you pay taxes on the $50,000 you make. If a business makes $1 million, they expense everything. They expense their taxes, the owner's car, the life insurance, the health insurance, the cost of goods sold, whatever. They get to the bottom line, and so they might have made $100,000 because they made a 10% gross profit. But they're only paying taxes on 10% of their revenue, whereas employees or residences are paying taxes on their entire income. So to talk about equality is sort of like asking the elephant to climb the tree. The residences are at a distinct disadvantage. And again, I'm saying this as a business owner. The residences are at a disadvantage compared to a business owner. A business owner is setting people's wages. It's setting the prices of what people are paying for goods. So, and they're also deciding within their company, who's going to make more. And of course, it's always the owner, and everybody else will make less. So they have plenty of fat and maneuverability to make the numbers work for them, because they can increase their prices, they can work a little harder at selling, they can find a cheaper supplier. They've got all kinds of variables to run a business to pay off a little bit extra on this bill. And based on these statistics, if the personal property prices have been increasing, which I'm not really a fan of, but that's a separate thing, that also means that they've got good cash flow because they're investing in their businesses. If you look at the way the town is laid out, what we're attracting, all of the big guys, all of the chains are here because they've got a full team to evaluate where to go locate. They're all locating at Auburn because Auburn's a good place to be. So the small businesses that are locating in Auburn, they're going to get all the same advantages that the reason the big companies are coming in. So there is no, then to get into the whole tax rate compared to the other towns and all the other stuff. This town's pretty well run, and this is a pretty good place to be. There's a little bit of, crying wolf here. Things aren't that bad for the businesses. We don't need to close these two tax rates. A business and an individual can never be equal. We're going to stop pretending that they can be equal. Auburn is ahead of the curve by having a separate tax rate. And to go back to a single tax rate is actually to be regressive. What we have now is progressive. We want to stay progressive. And I think we should go more progressive, which is to eliminate property. My theory, there's a lot of other stuff I'm not going to talk about, but people who know me think that the way to finance a town is not through the property tax anyway. The whole assessment thing is it's too difficult. There's no fair way to do it. And it also encourages inflation, which is basically the big bugaboo anyway. But what we should be doing is going, instead of what we did with Proposition 2.5, which sort of threw a monkey wrench into the status quo, was an okay monkey wrench. But what we really need to do is get, an ideal world is we would abandon property tax completely. That's not what this hearing is about. But what we should be doing is taking people that are 65 and older and letting them live here tax-free as long as they've been living here for 10 years or something like that. And then everybody else will pick up. It doesn't make sense to put seniors that are on Social Security to be paying property taxes. The way the system works is you never actually own your house. You're always leasing it from the town, and the town can take your house for, $500 in arrears. The whole thing is just totally out of whack. But at least we could take care of the seniors and start to move towards what really should be the abolishment of property tax. Because property tax within the whole financial system doesn't work. We have the towns doing property tax, the states doing sales tax, the federal government doing income tax. So you get 3 levels of government, and you basically have 3 nooses on you. So at least if we just had, like if we had income tax across the board, then you could do a progressive income tax, and everybody could actually pay what they could afford. But everything in the marketplace is not fair, because the guy who's, a waitress is making $2 an hour pays the same amount for a gallon of gas as the guy who's making 150 grand. It's like, so now to say that, oh, it's going to be equal makes no sense.
Thank you, Mr. Concilio. Is there anybody else in the audience? Mr. Reisner?
Thank you, Board. My name is Marty Reisner. I'm here on behalf of the Auburn Industrial Development Corporation. We're a 45-year-old industrial real estate company that's slowly built some industrial warehouse buildings and office buildings and land development throughout the community of Auburn. And I'm here, along with the other businesses of Auburn, to advocate a gradual, and I mean that a gradual equitable tax rate for the businesses and for the residences. And I know throughout the years we've paid a lot of property taxes, and we've invested hundreds and hundreds of thousands of dollars into our properties, as I'm sure the other businesses have, to attract the best type of tenants like the Mass Teachers Association, tenants like Masterman's, who have been long-standing members of the community. And so I hope that plays into your vote tonight. Thank you.
Thank you, Mr. Reisner. Anybody else?
I'm Guy Powell. We own Crystal Caves in Auburn, up on Southwest Street. We've been here about 20 years, and unlike that gentleman over there, I can't say that it's half of my life. I've got a few more years than that. Back when we started 20 years ago, our tax rate here was about 10%, a little bit less than 10% of our gross income. As you know, over the years, we've had some deflation. The business has gone down, and we are truly a small business. We do a lot for Auburn as far as hiring the youth. We do have part-time people, about 30 kids that we have to teach how to work. They come to us right out of middle school, many of them. And we are really almost a babysitting, but we have to pay the going salary, which this year is up to $10 an hour compared to what it was 20 years ago. As I said, the real estate tax when we first started was about 10% of our gross income. It's a lot more than 10% today when I look at what the economy has done to us and what we are currently paying. I really would like to see some sort of a effort to bring that rate down. It will help us out a lot. I'm not sure how much longer we can maintain our position in the town because, again, our receipts, not because of we're offering anything less, but the people out there can't afford us to continue to raise our rates to keep up with the increases in the tax rate, increases in our cost of products, because we'll wipe ourselves out. If I just look up down the street in Oxford, on Route 20, there's a small mini golf that's just went up. They're going to hurt us because, again, their tax rate is nowhere near what ours is. So trying to bring this down gradually over the years, and to what Mr. Sarkisian said, down to at least 1.17, I believe it was, would greatly help us as far as getting to be able to at least be able to compete with the people around us. Thank you for the time.
Thank you, Mr. Powell. Mr. Carpenter.
If somebody needs to speak, I can wait, Mr. Chairman, if that's
Okay.
your pleasure.
Mr. Loosemore, please.
Thank you, Mr. Chairman. Not as tall as you are. Mr. Chairman, members of the board, Stuart Loosemore from the Chamber of Commerce. I don't want to echo a lot of what many of our chamber members have said tonight, but I did think it imperative to get up just to say a few words. First, I certainly, if we wiped taxes off the table, this would make tonight's discussion very easy and very short for all of us. But we do thank you and the past boards for all your hard work and your effort. You have continued, as we've seen over the years, to ratchet down the distance between the residential and commercial rates, and we know full well that does play into the decision-making process of both big and small businesses when they look to expand, relocate, and reinvest in their businesses. And the growth that we've seen in Auburn, I don't want to say is all on that, but that is a part of their decision-making process, and we greatly appreciate what this board and past boards have done. We ask that you continue those efforts and move forward tonight towards reducing the gap between those rates. I also support a move to the commercial shift of 1.17, and just ask that the board please take into account the growth that you've seen, the businesses that have come here, and the businesses that we know that we can help attract, along with the great team that you have in the town manager and assistant town manager, and continue to grow Auburn, to grow the tax base, and in the long run benefit all taxpayers. Thank you.
Thank you, Mr. Loosemore. Mr. Carpenter.
Mr. Chairman, through you, I just had a question for the town accountant. You mentioned to us when we met with you and Mrs. Cosgrove about how this year we have the opportunity to hold the residential homeowners harmless because of some of the things that Mrs. Goodrich mentioned, some of the excellent financial management that we have enjoyed. Can you share that with the public so that they, residents are very concerned about their taxes? And I just have one follow-up, Mr. Chairman, after Mr. Kasanovich.
Through the chair to Mr. Carpenter, if you recall, when we first presented a budget early in the spring, we were utilizing the full extent of 2.5%. A number of factors that were really driving that were in areas of health insurance, which we realized to our public employees, a annual increase from the prior fiscal year of about 12%. So that's something we had to tackle. That was really driving the budget. We met with the members of the negotiating team and the insurance advisory committee, and we were able to agree to some concessions over a 3-year period that helped neutralize that 12%. In addition to utilizing a portion of a healthy trust that we have with about a balance of $7 million, we were hedging a portion of that trust to help get us through a difficult year. We went to town meeting with utilizing the full extent of 2.5. We knew that we had to put in reserve some dollars to offset or mitigate any future year increases in employee benefits and other fixed costs. But since then, in the areas of new growth, we recognized a substantial increase because of growth in personal property. Discussions with Cindy, the town manager, we utilized an extensive review. We had to pay some additional money to do that, but it paid dividends in the new growth that was certified by the Department of Revenue. We were able to utilize that new excess in new growth above and beyond what we estimated is a way to come off of 2.5. We received some additional state aid money that we were not anticipating, primarily in the area of Chapter 70. And we were able to increase and modify our local receipts by about $200,000 to help neutralize the tax rate. So going into the classification hearing, we did our best to try to keep that at an even keel at 1809. It came in at 1817, up slightly. Part of that increase was a result of a snow and ice deficit. We didn't get a full reimbursement from FEMA, so it was a one-time item. We have to raise that on the FY17 recap. That is driving that rate somewhat, but like I said, it's one time and it's going to revert back. So we tried going in tonight to keep that as even as we could, allowing the board to consider their options in a continued compression of the dual tax rate.
Thank you. And I do just want to say that I don't consider this business versus residents. We've all made investments in the community. We've all put money back into our properties, and we're very grateful to the business community as well as we are to the residents for all that they do for the town, whether it's through employment, whether it's through volunteerism, helping all of our community and community groups. It is a joint effort. I cannot support going to 1.17. I could go to 1.20. I think that's responsible in that in the next couple of years, we might be looking on the town side at some expenditures that might hit us all. So that would be a rate that I could support, but I do thank you guys and appreciate all that you do.
Okay, would you like to put that in the form of a motion?
Mr. Chairman, I would make a motion that we set the factor at 1.20.
Okay, motion's been made to set the factor 1.20. Is there a second?
Second.
Okay, Mrs. Brotherton, is there any further discussion? Oh, yeah, we have to, yeah, I guess we should close the hearing first. I guess before we close the hearing, though, some of the discussion we've had here tonight, and I do echo Mr. Carpenter's comments, but Ms. Cosgrove made a comment tonight about a search committee looking at tax exemptions for those who would be qualified for it. And I think we could make up a board of somebody from the administration, from the finance committee, from assessor's office, and even from the Board of Selectmen, which I would be more than happy to take part in to help out those residents who are on the fixed incomes. But also, if we could do that, then we would also be able to, I would be in support of going back towards the flat tax rate myself. But if we could do that and then also look into exemptions for those people that qualify for it, I would be more than happy to go forward with that. And
so my premature motion, I'll make a motion that we close the hearing, Mr. Chairman, if that's your pleasure.
Okay.
Second.
Okay, is there any further discussion? Being none, all those in favor?
Aye.
Opposed? Okay. So we will entertain that motion now, Mr. Carpenter?
Mr. Chairman, I will make a motion that we set the factor at 1.20.
Second.
Okay, the motion been made and seconded. Is there any further discussion? Mr. Berthium.
Being a part of the Chamber of Commerce and seeing what businesses have done in town over the years, can certainly appreciate that, as well as being involved in sports and schools. You know, how much this town actually goes to the businesses and asks for donations and help. I'm definitely in support of getting us closer to a single rate, and I'd like to see us even go a little bit lower than the 1.2, and I'll kind of present it back to the board. If we could go a little bit lower, I think that would be great. I'd like to hear what the other board members think.
Okay. Is there any other comments? Mr. Carpenter?
Sure. Thank you, Mr. Berthium. I've looked at it, and Ed can attest, and Mrs. Cosgrove can attest to the multiple questions I've asked as far as where we're going in the budget over the next 3 years, what we can look at from an employment standpoint on the town side, as well as expenditures. And so for me, the 1.20 is responsible. Let's see what we can do next year. If it's something I can't commit because I'm up for re-election, so I may not be here next year but let's look at it next year and see if we can do something in a responsible way. But I appreciate your thoughts.
Okay, is there anything else? Mrs. Goodrich?
Thank you, Mr. Chairman. So, as I spoke earlier, when we first looked at this, going into town meeting, we were looking at going to the 2.5, and, we did realize that savings. So, as I said earlier, I believe that everyone, including the businesses, are already realizing a savings this year. We may need to go to the 2.5 next year, and I am committed to either maintaining or moving, but I feel that this year, where they already have realized the savings by not going to the 2.5, I'll support the 1.20.
Okay. Is there any further discussion? Any discussion? Being none, the tax classification, we're going to 1.2. All those in favor?
Aye.
Opposed? It's unanimous. Thank you.
Mr. Chairman, I'll make a motion on the open space discount that we not apply the open space discount.
Second.
All right.
And if we want Cindy to give us a brief
Okay.
description on that, just before members take a vote.
So that's in the form of a motion?
Yes.
On the open space discount not to apply?
Right.
And Ms. Cosgrove, could you make comment on that, please?
Certainly. The open space discount, basically what the town needs to do in order to do an open space discount is classify certain lands as being open space. Which means they're not going to be built on. When I first came here, we did have land that was actually classified as open space, and what I found is every year 2 or 3 houses went on this open space. So in order to really do it, it would be something that you would have to go through with the planning department and conservation and look at what is truly open space. So right now, we don't have anything classified to actually use this on.
Okay, thank you. The motion was made. Was there a second?
Yes, sir.
Yeah, Mr. Carpenter is a second. So, motion been made and seconded for the open space discount not to apply. Is there any discussion? All those in favor?
Aye.
Opposed? Thank you. Mrs. Goodrich?
Mr. Chairman, I'll make a motion that we not apply the residential exemption.
Second.
Okay.
And again.
And Ms. Cosgrove, could you elaborate on that, please?
Yeah, once again, the residential exemption is something you can split the residential tax rate for certain qualifying properties. It tends to work better in communities where there are a large amount of non-resident property owners or a large number of vacation homes. In Auburn, we really don't have a lot of that, so it really doesn't apply well here.
Okay, thank you. So the motion's been made and seconded. Is there any further discussion? Being none, all those in favor?
Aye.
Aye. Opposed? Thank you. Okay. Now we go to the small commercial exemption. Is there a... Mrs. Brotherman?
Yes, Mr. Chairman, I'd like to make a motion that we apply the small commercial exemption.
Second.
Motion been made and seconded to apply the small commercial exemption. Is there any discussion, any questions?
We need a percentage.
For the chair, I believe you need to know the percentage.
Yeah.
Oh, I'm sorry. On the small commercial exemption, we have to have a percentage on that?
Mr. Chairman, I'd like to go with 10%, please.
10%, okay. So apply 10% for the small commercial exemption.
Correct.
And the second?
I will
Okay.
happily second that.
Is there any further discussion? Okay. Being none, all those in favor? Aye. Opposed? Thank you. Okay, and that takes care of that for tonight then. Okay, we've already taken care of this. Okay, so I guess we will take a 5-minute recess.
Make a motion that we take a 5-minute recess, Mr. Chairman.
Second.
Okay, all those in favor?
Aye.
Okay, we will resume our meeting tonight. Next we have on the agenda, we go to item 5A, the Board of Selectmen general items. Annual Board of Selectmen vote to adopt fees and fine schedules.
Through the chair, if I may.
Yes, please.
I just want to explain what's in the packet. So before you have a schedule, 2 separate schedules. One is the schedule of fees, and one is the schedule of fines. What you have before you are the exact fees and fines schedule that was posted in accordance with the law last October following the board's vote on these fees and fines. These fines are specific to the general bylaws. So as a reminder, the town over a 3-year period went through a process to update all of their general bylaws. It was approved by town meeting. Then in October, it was approved by the Attorney General. Upon approval by the Attorney General, the board took a vote per the new bylaws to establish the fees and fines, and per the general bylaws, the board is to take an annual vote establishing those fees and fines. We are not proposing any changes to those fees and fines currently. Each department head reviewed those fees and fines that are specific to their department in the bylaws. The majority of these are set by Mass General Law or CMRs, various other state regulations, some federal regulations. So there are limitations anyway. So we're keeping our eye on the laws just to see if there are any amendments or changes. And since last year, there are none. So at this point, we're not recommending changes to these specific fees and fines.
Okay. Are there any questions, comments? And these are only for bylaws, so anything outside of the bylaws, there are any fees, and those would be increased by whatever department.
Exactly, that's a good point. There are a couple of fees and fines that we need to look at that the board sets, and the board may want to look at on some of your own policies that you have, such as the entertainment license or any other licenses that are specific that the board gives that are not part of the general bylaws. So this fee and fine is just for general bylaws, and there are certainly opportunities, and I think we should be looking at fees and other fees and fines to see if they should be adjusted, but not as part of this package. So you're right.
All right. Is there any further questions? Okay, being none, I'll entertain a motion. Mrs. Goodrich.
Mr. Chairman, I'll make a motion that we adopt the fine and fee schedule as presented in our packet.
Second.
This motion made and seconded to adopt the fees and fine schedules. Is there any discussion? Being none, all those in favor? Aye. Opposed? Thank you. Okay. Now, under town manager items, item 6A, update on the dog park decision not to pursue the package on golf course site and possible future meeting. And again, tonight this is going to be strictly from the town manager for an update to let us know exactly what's has been corresponded with since our last hearing. So there won't be any discussion on this tonight. It'll be just to hear an update from the town manager. So I will turn it over to Ms. Jacobson.
Thank you, through the chair. As you know, after much analysis, town administration had recommended to the Board of Selectmen that the land the town owns across the street from the golf course, adjacent to where the parking area is, that is town-owned, was amongst it and raised high as the #1 favored location at that time for a potential dog park. And that was really based on a number of different criteria, including site topography, engineering, costs. So at that time, we had recommended that prior to making any final decision on whether we should put a park there, that the Board of Selectmen should hold a public hearing and notify the abutters and invite them in to solicit their input and their comments. And the board absolutely was in agreement with this. As a result of your board vote to hold a hearing, we notified abutters within 500 feet. We did have that public hearing. You held that on September 26th. And during that hearing, as you all know, we heard from an overwhelming number of residents that were opposed to that site, citing several concerns. And there was a lot of concerns, a lot of issues that were raised, and a lot of potential problems with that site, and that's the reason we held that hearing. You know, we said it all through the hearing. I stated it, you had stated it. We were there to solicit the input. We also stated it is not our intent, and I want to state again, not our intent to move forward on a site and force anyone to have a dog park. It's not a requirement to have a dog park, so unless the neighbors or the residents of an area that we're looking at are supportive of it, it's certainly not something that town administration would want to recommend, nor do I think the board would want to recommend it. So we went back after that meeting, looked at all the comments, truly felt this is not something we want to pursue. There's no need to set a stage where the neighbors are concerned and upset, and we're forcing something that we don't need to force. This again, this is, if we did it and if we pursue a dog park, it has to be because the community as a whole wants it, and it has to be at a site that the community as a whole would support, and that clearly was not that site. So we are withdrawing any recommendation to have that site be looked at for a dog park. Further, we went back to look and see if there were any other sites, and that's why we, the item about a potential future meeting. We went back to the drawing board to look to see if there were other sites, what some of the merits were. Quite honestly, other than maybe one or two sites, every single site has some type of challenge, whether it's an engineering type of challenge or a logistic type of challenge or a site development challenge. Every site we looked at has a challenge, and it's making this process very difficult to just come back with another recommendation to the board. If we did have a specific recommendation, our suggestion again would be notify the abutters of that particular neighborhood, of that particular site, invite them for their input and their comment. We may hear some of the same concerns that we heard from the residents of that area, and their legitimate concerns to be raised. So I turn to the board. That's the update on the Packagug golf course site. We are not pursuing it at this time.
Okay. Again, this update was for us to let us know and let the public know that Upland Street was no longer in the mix. We're not going to discuss this or have any comment on it tonight. There have been no other locations selected to be looked at. Therefore, there's been no abutters notified, and so in fairness to them, I don't want to make any comments tonight or any further discussion. My feeling is that there has been a lot of input, and a lot of the input we got was from hearings from the past, and they were not favorable. And I haven't gotten any calls or comments of support, maybe one or two, but that doesn't justify the town pursuing another site for the dog park. If we could find that there were more people that were interested in another location in town and show support, then I would say let the town administration go forward and take a look at another site, but I haven't got enough support, and so my feeling is I would like to direct town administration to put this on hold until we hear from the general public, and I'm going to leave that out to the board for their general discussion and see what their thoughts are. Any comments? Mr. Carpenter.
Well, I appreciate the update, and I'm sure, judging by some of the familiar faces in the crowd, that there's a sigh of relief that they will not be hearing the barking of dogs or other things in their neighborhood. And I just want to thank them, and I've run into a few of them, and I've thanked them personally for coming and sharing what was real content, real concerns about their neighborhood. And no one should make you feel as if when you come before this board that you're raising a comment that isn't fair, that isn't something that we want to hear. I know we did have one comment from a former official, which I just want to disassociate myself with. We don't have NIMBYs in town. I've served for a very long time with committees, and we always look forward to it when the public comes out and shares their opinion, because it makes the process stronger, and I think that's what you did, and I appreciate it. I don't know that I, at this time, am ready to support abandoning a dog park decision, just because in discussions with the manager and some other people, there is some interest in a dog park. So I don't know that I could vote tonight to say, let's not go forward. So that's my take, but thank you.
Okay. Is there any other comments? Mrs. Goodrich?
Thank you, Mr. Chairman. Just to follow up on what Mr. Carpenter had said, whether it's a dog park or another issue, this is the process. The process has worked. Many times people believe that we've come in with our minds made up, and this is exactly what the process of holding these hearings is, to have citizen input, to hear what the residents have to say, and then to take a vote. So I agree. We heard the residents from that area. We're not going to pursue that area. I'm not sure what type of vote we need to take tonight to see. I think I'd rather wait and see what kind of feedback we get from this update tonight to see if there is still an interest, if there's anyone. I know that we had a group that was committed to raising some funds. These grants do become available annually, so I think I would support just kind of seeing what feedback we get after tonight before we set a meeting that may not be necessary.
Okay. Is there any other comments? Then I guess the direction we'll provide to the administration is to, we'll put this on hold until such time we hear any voices of support, see people come forward and find out where people are interested. They know the background from the last hearing of some of the sites that we were looking at. Let's see if we get some feedback back, but I'd say that to town administration to let's put this on hold until we get some hearing back as support. If that's all well and good, then that's the way we'll provide that direction to the town. Mrs. Brotherton.
Yes, Mr. Chairman, thank you. I just wanted to say that this certainly became a very heated discussion in a very quick time. And both sides are right. Everyone has their right to their concern. I am a dog lover. Would I want a dog park in my backyard? No, I would not. However, I want to extend a huge thank you and a huge kudos to our town manager, because I know after multiple conversations, she really took a lot of heat, and I want to commend her, and I want to thank her for her due diligence on this issue. Thank you.
Thank you, Mrs. Brotherton. Okay.
Thank you. Through the board, I appreciate it. And I think that's a wise decision at this point, to see if there is overwhelming support from the residents, and then if there is, then we can continue to pursue. Again, it's a challenge to find a site that people want to have and that people can support, and it's certainly nothing that we want to force anyone into doing. So I think we appreciate the direction from town administration, and we'll wait to see if you do hear from the residents or we hear from the residents. We'll stay in touch with it.
Okay. Thank you. Okay. Item 7. Okay.
I just want to thank, on behalf of the National Butter residents, that the board and the town manager are giving.
Yeah. Can you please go up to the microphone, please, and identify yourself? Then everybody will be able to hear.
Jen Shea, 30 Ward Street. I just want to thank the board, the chair, the town manager, and everyone for giving us due consideration after the hearing. I know there was a lot of discussion and it was a short turnaround, but we really do appreciate that you've taken the time to consider all of our concerns, both for and against this location, and made this decision now for the community's best interest and not just those in that area. We really do appreciate that. So thank you.
Thank you, Ms. Shea. Okay. Tabled items. We have none. However, the Board of Selectmen member items, actually it was a tabled item for the November and December meeting schedule. This was tabled on September 12th until this meeting tonight for discussion and a vote. The first thing I have on that is we had discussed having, well, I guess we'll take a 2-minute recess until the room gets cleared.
So moved.
Second?
Second.
All in favor?
Aye.
I do want to give a quick update.
Again, the tabled items, there were none, but this Board of Selectmen member item 8A is the December meeting schedule, November and December meeting schedule. So we want to discuss that tonight. First off, I guess what we're going to say is we discussed possibly having a meeting on November 16th, a Wednesday night, for a possible meeting of another possible location for the dogs. And that tonight has been kind of put on hold until we hear, get some feedback. So that meeting will no longer take place on November 16th. And so November 14th, we do have a meeting scheduled then again on the 28th. And I guess I'll turn it over to Ms. Jacobson. We'll hear a little bit about what might possibly be coming on the 14th.
Sure. While it's awfully hard to predict everything that would come in, I would say just in general, November is the month that the licenses are all due for renewals. So my suggestion would probably be to hold the meeting on the 14th because we'll start with the licenses. The notifications are already going out. And then we'll have a better idea if we're going to have additional licenses on the 28th. In the past, the board has taken votes that are conditional, that if any additional licenses come in after that vote and they're just the renewals, that you would automatically give those approvals. But I would definitely have it on the 14th. We're going to need that. We may need it on the 28th. We'll know a little bit more as we get closer. It's hard a month out, a little more than a month out to say that now.
And the 28th is the Monday after Thanksgiving.
It's the Monday after Thanksgiving. Same thing with December. The one time in December that you may be able to consider, and we'll know more as we get closer, would be the 26th. Excuse me, the 27th. The 26th is the holiday this year, which is a Monday. That's when Christmas is, the holiday is actually celebrated. So the 27th would be your meeting, and given that it's school vacation week, it's the week between Christmas and New Year's, most of the licenses hopefully will have already come in by then. We'll know more as we get closer. And again, you could take a vote conditional upon them coming in that period. I believe you did that the last 2 years.
So you're saying we could do that on...
I'm saying the 27th, if any of the meetings, would probably be the one that we might not have a full agenda, but I can't say that quite yet, knowing that it is license renewal time. But we'll certainly keep our eye on it, keep you informed. As we get closer, we should have a much better handle on what's coming in.
So we are talking about having a meeting on 11/14 and then also on 11/28. That's for licenses, correct?
Right now, but you may not need the 28th, but let's wait and see as we get a little closer.
All right.
And likewise, the December meeting, December too far away to say it, but just to start thinking about it now. I know that's a tough week for people as far as vacations go, and it is hard actually even getting people in here from the public. If we don't have a heavy agenda, we can look to try to move things so that we can give people that week off.
Okay, so we're trying, and they are trying to accommodate, meetings for the holiday schedule, and but we do have our work to do, so we have to do our due diligence. So let us go with the November 14th. Leave the 28th open for possible, but definitely the first week in December to come back and meet again anyway. So the second.
Okay.
Second Monday in
What's that?
December.
The second Monday?
I'm sorry, the second Monday in December would be the 12th.
The 12th. Okay.
Again, our assumption is that we're going to need the 28th of November because of the licenses.
Okay.
And then you can pick up whatever extra ones come in on the 12th.
Okay.
And then we'll see if there were a lot that still haven't. You may still need that 27th, but if not, maybe you can take a conditional vote.
November 14th, we can revisit this and find out where we are and what's going on with it. Mr. Carpenter.
Can I just speak to that? I mean, I think we can take a pro forma vote on the license renewals. I mean, we get a list. It's not like we dig into it. I've been here 2 years. I haven't seen any movement. And when I proposed this, I always said that we were subject to recall. So if there was actual business that couldn't wait, we should meet. But I don't want to have a 20-minute meeting to approve something that we don't need to approve, or have us come here and take staff away from their families and time away from the holiday season where we're all very busy. I think it's, considerate to do everything we can to give our staff a break from having to come here for 20 minutes, which to me is not only a waste of our time, it's a waste of their time, and it doesn't reflect well on the board. So that was my reason. And last year we spent, I think, 2 months, starting in November, all the way through January, almost up to February, having 15-minute meetings. That does not reflect well on this board.
Just as a note, Mr. Carpenter, I think that any business that we do is something that's, it helps the residents, it helps the businesses, and if something comes forward, it's not a waste of time. If it is for a 10-minute item, I wouldn't want to put anybody on hold for a month because we weren't willing to meet to make that happen. So I guess I take a little note to your comments, but I guess I understand exactly where you're coming from, but we do have a responsibility here also.
Absolutely.
So our meeting will be on November 14th and possibly the 28th, but we will visit that again on November 14th.
If I can just respond, Mr. Chairman.
Yes.
We spent the summer and we had a monster meeting when we should have been recalled for the second meeting in August. We made people wait during the summer months. So I would point that as a note that if we can do it in the summer, and when the winter is our slowest period for all of our boards, I think we owe it to our staff to do that. And I think, in my opinion, and we can all differ, I think we spent a lot of time last winter not doing anybody any good by meeting for 15 minutes. I didn't think that it rose to the level of calling us out to a meeting and inconveniencing staff to have us do that. I didn't think anything on those agendas reflected well on the board.
So noted.
Thank you.
Thank you. Anybody got anything else?
Mr. Chairman, actually, I do, if I may.
Oh, please.
This just came in today from the Mass Department of Transportation. If I would pass this along, it was a press release that they released on the upcoming transfer of the electronic tolling from the no cash to all electronic. So I wanted the board to be aware of this and to let you know that Mass DOT did have a press conference today in Weston and talked a lot about the demolition of the toll plazas, and just to make people aware that there are going to be some likely traffic delays while they're doing this. And it's really specific as to how they're doing this conversion. So we will be putting this, if it's not already on there, I didn't check before I came in, but our intent is to put it on Auburn Community Television, social media, and our website to make sure that the public is aware of this. So we wanted you to see it as well. And again, this just came in today.
Thank
so
you.
That's why it's not on the agenda. We didn't have it until this afternoon.
Yeah, it's sometimes I've gone up to the tolls many times, and people that don't use it all the time, they're confused whether it's no cash or easy pass or whatever it is, and they're not quite sure. And with something like this going out, especially with the tolls are going to be removed and it's going to be no cash, people are still going to be looking for those lanes to get into, so there might be a little bit of traffic hazard, and along with the construction there will be a little traffic hazard. So any information that can go out there would be just a great help and just a great benefit.
Thank you. I do want to make a note here that fortunately for Auburn, we are one of the locations, I think one of maybe 8 in the Commonwealth, where people can go actually into the DOT office to purchase the passes. Mm-hmm. The passes, from what I've read from this press release, the ability to electronically purchase a pass is going to be shut down, I think, from the 28th of October to November 1, around that point, while they do this, the transition. But during that time, from October 28th to November 1, the walk-in customer service locations are going to be open for assistance and account sign-up. So you won't be able to get your pass online, but you can walk in during that period. And Auburn's hours are on here at 27 Mid-State Drive. So, and the extended hours, they're going to be open Saturday, October 29th, this coming Saturday, 8 a.m. to 2 p.m., Sunday, October 30th, 8 a.m. to 2 p.m., and Monday, October 31, 7 a.m. to 7 p.m. So there is an effort to open, be available to the public, and allow walk-in. So Auburn residents are lucky that we do have this office here.
Great. Thank you.
Mrs. Brotherton, I think.
Oh, I'm sorry, Mrs. Brotherton.
I'm sorry, through the chair. Ms. Jacobson, did you say in the beginning that this was going to go on our website?
Yes.
Thank you.
And our cable television.
Yes, okay, thank you.
As well as social media.
Okay. Has anybody got anything else? Okay, I do. We'll go back to tax classification for a moment, if we will. We discussed possibly some exemptions for some of the elderly people and people who qualify for exemptions, and I think we should have some sort of a study committee for that so that we can get as many exemptions for as many people as we can to help them out. And I think that I'd like to approach the administration to take a look and putting something together, and I would like to be part of that. And Mr. Berthium, please.
I would be happy to be a part of that as well.
Okay. So there is some interest here on the board, and if you could approach Ms. Cosgrove and maybe possibly talk about who we could put together on this, I think it would be a big help for the residents, I know, and see if we can move forward on it.
Through the chair, I was just talking with the CFO and assistant town manager. We could do a report with a recommendation as to how many should be on that, and possibly having the board make the appointment or having the town manager make it if a board member is going to be on it. But we'll look into it and come back with a recommendation.
Okay, that would be great, and we won't hold you until the next month or whenever you can get that chance, because I know that your desk is quite full right now because of the end of the year projects, but if we could do that just to help out our residents.
No, that would be good to get it underway. Yeah.
All right. And one last thing for tonight, unless you have something else.
I'm all set, thank you.
Okay, we've got minutes from July 11th, 2016. Is there any comments, concerns, questions, omissions? If not, I'll accept them as presented. And on that note, I'll entertain a motion.
Motion to adjourn, Mr. Chairman.
Second. All those in favor? Aye. Thank you and good night.